Hello everyone, my name is CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In today's yet another practical only lesson on special purpose books, we will start with how to record and post purchase returns and sales returns and showing their impact on supplier and customer accounts. Then we will learn how the opening and the closing entries are transferred to the trading account and profit and loss account. Next, we will cover the adjustment entries with examples of outstanding expenses, accrued items, depreciation, and closing stock. From there, we will tackle the special transactions like bad debts, sale of assets, and loss due to fire. Finally, we will take up business takeover entries where you will learn how the assets and the liabilities of a running business are recorded through journal entries. So grab a seat and watch this video till the end to master the subsidiary books. Let's get started. Let us understand recording of purchase return transaction with an illustration. Record below transactions in a purchase return book of the Holy Trading LLC. On 15th March 25, Holy Trading LLC returned goods to Tolly Trading LLC for $5,000 because of damaged goods and allowed a trade discount of 10% on the original purchase transaction. This transaction will be recorded in the purchase return book as displayed on your screens. In the date column, the date on which the debit note is issued is written. In the particulars column, the name of the supplier, Tolly Trading LLC, is written and the value of the goods returned is written in the details column for $5,000. The trade discount of 10% allowed will be mentioned in the particulars column and the value of the trade discount, that is $500, is mentioned under the details column. The amount of goods returned net of trade discount, that is $4,500, is mentioned under the details column, and again $4,500 is written under the amount column. On 20th March 25, Holy Trading LLC returned goods worth $400 to Molly Trading because the goods supplied were not as per approved sample. This transaction will be recorded in the purchase return book as displayed on your screens. The transaction will be recorded on 15th of March 25 and the name of the supplier, that is Molly Trading LLC, will be written under the particulars column. The value of the goods returned for $400 will be written under the details column and again under the amount column. On the last day of the month, that is 31st March 25, the purchase return book is totaled and it comes to $4,900 in the given illustration. Since the total value will be posted to the credit of the purchase return account, the words by purchase return account is written under the particulars column. Let us now learn the process of posting purchase return entries to the ledger account basis the purchase book transactions recorded in the purchase return book of Holy Trading LLC. An abstract of the purchase return transaction dated 15th March 25 to Tolly Trading LLC for $4,500 is displayed on your screens. This purchase transaction will be recorded in the supplier account of Tolly Trading LLC ledger account. The date of the transaction, that is 15th March 25, will be written in the date column on the debit side of the account of the supplier Tolly Trading LLC for $4,500 by writing the words to purchase return account in the particulars column. Another transaction of purchase return to the supplier Molly Trading LLC for $400 is displayed on your screens. This transaction will be posted to the supplier account of Molly Trading as displayed on your screens. The transaction will be posted on 20th March 25 on the debit side of the supplier Molly Trading account for $400 by writing the words to purchase return account in the particulars column. Let us see how at the end of the month the total value of purchase return is posted to the purchase return account in the ledger. The total value will be posted to the purchase return account on 31st March 25 on the credit side of the purchase return account for $4,900 by writing the words Buy sundries as per purchase return book. Let us strengthen our understanding of sales return book with an illustration. Transaction T1 is on 1st of March 25, Tube Trading LLC returned 200 electric fans. This transaction will be recorded in the sales return book as displayed on your screens. This transaction is recorded in the sales return book on 1st of March 25, that is the date on which the credit note is issued. In the particulars column, name of the customer Tube Trading LLC along with the complete description of the goods returned is mentioned. The gross value of the goods $30,000 is written in the details column. The amount of applicable trade discount of $3,000 is also written in the details column. Net value of goods returned for $27,000 after deducting the trade discount is written in the details column and is also written in the amounts column. Transaction T2 is on 11th March 25, TriStar Trading LLC returned 100 defective ACs to Holy Trading LLC. This transaction is recorded in the sales return book as displayed on your screens. In the date column, the date, that is 11th March 25, on which the credit note is issued is mentioned. In the description column, the name of the customer TriStar Trading LLC along with the complete description of the goods returned is mentioned. The value of the goods returned for $25,000 is written in the details column and again in the amount column. At the end of the month, that is 31st March 25, all the sales return transactions are totaled and are posted to the debit of sales return account for $52,000. Now let us see how the journal entry for the sales return is passed. The entry is passed on 31st March 25 by debiting the sales return account for $52,000 being the total value of all the sales return transactions for the month of March 25. Respective customer accounts will be credited. That is, Tube Trading LLC will be credited by $27,000 and TriStar Trading LLC will be credited by $25,000. Proper narration for the journal entry is also mentioned. The sales return book of Holy Trading LLC for March 25 is displayed on your screens. Entry in the sales return account will be posted on 31st March 25 on the debit side of the sales return account for $52,000 by writing the words two sundries as per sales return book for March 25 under the particulars column. Sales return book abstract of the sales return transactions of Tube Trading LLC is displayed on your screens. The sales return transaction will be posted in the ledger of Tube Trading LLC on 1st of March 25 on the credit side for $27,000 by writing the words buy sales return account in the particulars column. Sales return book abstract of the sales return transaction of TriStar Trading LLC is displayed on your screens. This sales return transaction will be posted in the ledger account of TriStar Trading LLC on 11th of March 25 on the credit side of the TriStar Trading LLC for $25,000 by writing the words buy sales return account in the particulars column. Let us further understand the opening journal entry with an illustration. A specimen of a balance sheet of a business as on 31st December 2024 is displayed on your screens. Left hand side of the balance sheet is liability side. On liability side, we have sundry creditors of $24,000 and capital of $70,000, making a total of $94,000. Right hand side of the balance sheet is asset side. On the asset side, we have closing balances of cash in hand $4,000, cash at bank $15,000, sundry debtors $5,000, closing stock of $20,000 and plant and machinery of $50,000, making a total of $94,000 of the asset side. Accounts appearing on the liability side of the balance sheet have credit balance and accounts appearing on the asset side have debit balance. The opening journal entry is passed on the first day of the new accounting year, which in our illustration is 1st of January 2025. All the asset accounts are picked from the asset side of the previous year's balance sheet and are recorded to the debit side of the respective accounts as shown on your screens. Similarly, all the liability accounts are picked from the liability side of the balance sheet and are recorded to the credit side of the respective accounts as shown on your screens. Basis information given in the previous slide, let us first find out the nominal accounts which will be transferred to trading account of the business to determine the gross profit of the business. In our illustration, these expense nominal accounts are opening stock $20,000, purchases $60,000, wages $16,000 and sales return $3,000. The closing journal entry for expense nominal accounts will appear as displayed on your screens to determine the gross profit of the business. The entry will be passed on the last day of the accounting period, that is 31st December 24. All the expense nominal accounts having a debit balance, therefore they will be credited to close them. Opening stock balance account will be credited by $20,000, purchase account by $60,000, wages account by $16,000 and the sales return account by $3,000. And the second part of the entry will be debited to the trading account for $99,000. Now identify the income nominal accounts for which the closing entry will be passed in the trading account. These income nominal accounts are sales $88,000, purchase return $2,000 and closing stock $40,000. The journal entry for the income nominal accounts will be passed as displayed on your screens to determine the gross profit. The entry will be passed on 31st December 24, that is the last day of the accounting period. All the income nominal accounts with credit balance will be debited to make their final closing balance as nil. Sales accounts will be debited by $88,000, purchase return account by $2,000 and closing stock account by $40,000. The second part of the entry will be passed by crediting trading account for $130,000. Let us understand how the closing entries of the nominal account will be posted in the trading account. Trading account after posting closing nominal entries will appear as displayed on your screens. Let us understand how the expense nominal journal entries passed in the previous slide will be posted in the trading account. All the nominal accounts which were credited will be posted to the debit side of the trading account. Similarly, let us understand how the income nominal account journal entries will be posted in the trading account. All the nominal accounts which were debited will be posted to the credit side of the trading account. After posting all the nominal account entries to the trading account, do the totaling of the credit side of the trading account, which in our illustration comes to $130,000. Now deduct all the debit side transactions from the total of the credit side and we are left with a balance of $31,000 being the gross profit of the business. It is displayed by writing the words to profit and loss account, which means the gross profit of the business is transferred to the profit and loss account. This will make the total of the debit side also equals to $130,000 and the trading account is said to be balanced. Let us now pass a closing journal entry for the nominal accounts at the end of the accounting period in the profit and loss account of the business. The nominal expense accounts which needs to be posted are salary account $16,000, carriage outward account $2,500, rent account $3,000, insurance account $1,000, discount allowed account $2,000, electricity expense account $2,500, interest paid account $1,000. The journal entry for these expense nominal accounts will be passed as appearing on your screens to determine the net profit of the business. The entry will be passed on 31st December 24 by crediting all the nominal expense accounts. Salary account will be credited by $16,000, carriage outward by $2,500, rent by $3,000, insurance account by $1,000, discount allowed account by $2,000, electricity expense account by $2,500, and interest paid account by $1,000. Second aspect of the entry is debited to the profit and loss account for $28,000. The journal entry for income nominal accounts with credit balance of $1,000 for discount received account and $5,800 for commission received account will be passed as displayed on your screens to determine the net profit of the business. Entry is passed on the last day of the accounting period, that is 31st December 24. Both discount received and commission account will be debited with $1,000 and $5,800 respectively. Second aspect of the entry is credited to the profit and loss account for $6,800. Let us learn how the closing entries are posted to the profit and loss account. First of all, the gross profit of $31,000 as determined as per the trading account in the previous slides will be written on the credit side of the profit and loss account by writing the words by trading account. Both the income accounts of discount received and commission account will be posted on the credit side of the profit and loss account for $1,000 and $5,800 respectively. All the expense nominal accounts will be posted to the debit side of the profit and loss account. Now from the total amount of $37,800 of the credit side, when all the debit side transactions are deducted, we are left with $9,800 being the amount of net profit for the accounting period, and it is written as to net profit on the debit side of the profit and loss account. The total of the debit side also becomes $37,800 and thus the account is balanced. The net profit of the business is transferred to the capital account of the business owners by passing the entry displayed. The two accounts which are affected are profit and loss account and capital account. Profit and loss account in this case will be debited and the capital account will be credited by $9,800. Let us further strengthen our understanding of the year-end adjustment entries through an illustration. Pass below adjustment entries in the books of Tolly Trading LLC at the end of the accounting year, that is 31st December 24. First transaction on your screen is salary for the month of December 24 for $20,000 is outstanding. The adjustment journal entry for this transaction will be passed on 31st December 24. The two accounts affected by this transaction are salary account and outstanding salary account. Salary account will be debited and the outstanding salary account will be credited, and the entry will be passed for $20,000 and the proper narration will be written for the adjustment journal entry. Next transaction displayed on your screen is an interest amounting to $2,500 accrued on investment. The adjustment entry will be passed on 31st December 24. The two accounts affected are accrued interest account and interest received account. Accrued interest account will be debited while the interest received account will be credited, and the entry will be passed for $2,500 and the proper narration will also be written for the adjustment entry. Let us take another illustration. Pass below adjustment entries in the books of Tolly Trading LLC at the end of the accounting year 31st December 24. The transaction on your screen is rent for 6 months amounting to $60,000 received in advance. The two accounts affected are rent received account and rent received in advance account. Rent received account will be debited while the rent received in advance account will be credited. The entry will be passed for $60,000 by writing the proper narration. Next transaction on your screen is Trade Association subscription for $6,000 paid for 2 years. The two accounts affected are prepaid subscription account and subscription account. Prepaid subscription account will be debited while the subscription account will be credited. The transaction will be recorded for $6,000 by writing the proper narration for the entry. Pass below adjustment entries in the books of Tolly Trading LLC at the end of the accounting year 31st December 24. The transaction on your screen is business had a closing stock of $50,000. This adjustment closing entry for this event can be passed in two ways. Under option 1, the two accounts affected are closing stock account and trading account. Closing stock account will be debited and the trading account will be credited. The entry will be passed for $50,000 by writing a proper narration. Under option 2, the recording of this event, the two accounts which are affected are closing stock account and purchase account. Closing stock account will be debited while the purchase account will be credited. The entry will be passed for $50,000 by writing the proper narration. Next transaction on your screen is depreciation on furniture $2,000 and on building $5,000 charged for the year. The accounts affected by this transaction are depreciation account, furniture account and building account. Depreciation account will be debited by $7,000 and the furniture account and the building account will be credited by $2,000 and $5,000 respectively. Let us take another illustration for the transactions which are not routine in nature. Enter the following transactions in the appropriate books of original entry. Transaction on your screen is on 1st of January 25, Poly LLC was declared insolvent and a sum of $2,000 could not be recovered. This transaction will be recorded on 1st of January 25. The two accounts affected are bad debts account and Poly LLC account. Bad debt account will be debited while the Poly LLC account will be credited. The entry will be passed for $2,000 by writing a proper narration. Next transaction on your screen is on 3rd of January 25, business sold an old machinery to Kuli LLC for $3,000. The transaction will be recorded on 3rd of January 25. The two accounts affected by this transaction are Kuli LLC account and machinery account. Kuli LLC account will be debited and the machinery account will be credited. The transaction will be passed for $3,000 by writing a proper narration. Another transaction on your screen is on 5th of January 25, goods withdrawn from business for personal use for $1,500. This transaction will be recorded on 5th of January 25. The two accounts affected are drawings account and purchase account. Drawings account will be debited and the purchase account will be credited. The entry will be passed for $1,500 by writing the proper narration. Another transaction on your screen is on 6th of January 25, business purchased furniture from Homebox LLC for $5,000. This entry will be recorded on 6th of January 25. The two accounts getting affected are furniture account and Homebox LLC account. Furniture account will be debited and the Homebox LLC account will be credited. The transaction will be recorded for $5,000 by writing a proper narration. Next transaction on your screen is on 7th of January 25, goods worth $2,000 lost by fire. This transaction will be recorded on 7th of January 25. The two accounts affected by this transaction are insurance company account and purchase account. Insurance company account will be debited while the purchase account will be credited. The transaction will be recorded for $2,000 by writing proper narration. Next transaction on your screens is on 9th of January 25, insurance company accepted the claim and settled it for $1,500. This transaction will be recorded on 9th of January 25. The accounts affected by this transaction are bank account, loss of goods by fire account, and insurance company account. Bank account and loss of goods by fire account will be debited with $1,500 and $500 respectively, and the insurance company will be credited with $2,000 by writing the proper narration. Let us study yet another illustration. Tolly LLC took over a running business on 1st of January 25 for a consideration of $100,000. Following assets and liabilities are taken over. Assets which are taken over includes land and building for $40,000, plant and machinery for $45,000, furniture and fixtures for $15,000, stock for $35,000, and sundry debtors for $30,000. While the liabilities which are taken over includes sundry creditors for $35,000 and bank loan for $30,000. The journal entry will look like as displayed on your screens. The entry is passed on 1st of January 25 by debiting all the assets taken over, that is the land and building for $40,000, plant and machinery by $45,000, furniture and fixtures by $15,000, stock by $35,000, and sundry debtors by $30,000. The liabilities taken over, that is the sundry creditors, will be credited by $35,000, bank loan by $30,000. The consideration of $100,000 paid will be credited to the capital account. Proper narration of the entry will be written to explain the nature of the transaction. In my upcoming video on 20th September 25, we will learn how to identify the appropriate subsidiary books for different business transactions. We will practice recording and totaling of transactions in the cash book. The next step involves posting of these entries to the relevant ledger accounts. We will also see how to summarize the subsidiary books created from the multiple transactions. Finally, we will cover the preparation of trial balance and its key features. If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel at the rate Accounting Buddy NB. Thank you and goodbye for now.